Yes.
Testing, and we are live. I think I did this one time before, and it was mad late in the night. But I just wanted to give some insight in terms of how I do my pre-market, my week analysis, like how I determine my bias going into the week. So I usually do that on the weekends. So I always have a game plan going into the week. All right. And I'm just talking right now. There's nobody on the stream, but I will save the video. So it's just me freestyling at this point. Right. I have nothing planned. Just like a freestyle and go to the stuff. My wife and son is here in the background, so you might hear him and stuff. But I said it's a freestyle to try this out. I didn't want to I didn't want to like record and then post it, so let's go live and freestyle. And I don't know if you guys notice I don't edit my videos, right? I don't edit out nothing. If I make a mistake, it's probably going to be in there, still in there. It just again, it's trying to be as raw and open and vulnerable about this process as possible. All right. So let me see if I can go ahead and share my screen so you guys can see the charts. Uh, let me share the window. So let me share the window.
Come. Come.
I'm gonna have to share the window because if I share just the tab again, so it will look like that until I go onto the charts. So what I usually do is this is also a part of the TradeZilla thing. Yeah, I've been giving TradeZilla so much free program, but yeah, it's a great tool. Um, but this is usually let me show what I did for last week. So this is what I did for last week. I literally have a weekly outlook and I determine whether I'm going to be buying or selling. So if my directional bias is bullish, I'll be looking for buys. And if you watch the recap for week 2, you see that only took buys on gold. It's all buys. Same thing for GBP, and my bias was right for all of them. My bias was right for all of these. I wasn't sure about this, but the market did give me enough information throughout the week for me to actually capitalize on it. All right, so I capitalize on those. Now I kind of want to have a little bit more. I want to have a look at it better this week. So what I'm going to do, I'm going to be adding screenshots. Now I've already done GJ, but I can go through it again just for this benefit of it, you guys. All right. So I literally always start with top down analysis. So I call it top down analysis. We start from higher time frames, right? The reality is that the higher time frame trends have more, they're stronger and usually are longer than the lower time frame trends. And trend is time specific. One of the main things about price action is time specific. All of this is, if you're watching course, going to the course, and I've stated that all of these things are time specific. This one candle here on the, let's go to the chart. This one candle here on the weekly represents the movement of price or the summarization movement of price for that 1 week. Right? Because the candle gives you specific information. The candle gives you open price, highest the price went, which is last week's high. So this is last week. I usually mark those on. Last week's high, last week's low, where the market opened, where the market closed. And that's the information that it gives you. But it is always time specific. Time is a movement of price over a period of time. Same thing with, again, this is movement of price over a period of time, and each candle represents or summarizes the movement of 1 week of price movement. All right, so based on my directional bias for last week was again, I say it was bearish because of how this closed, right? Market rejected this level, closed well below this one. So the momentum, this long week here was showing that the sellers took over the market and pushed up. So even the buyers are trying to break this level, the sellers pushed down the price. The selling pressure pushed down the price and it closed down. And then there was also a double top. So this is also like a trading formation that you can use price action. When price goes to if price goes to somewhere it are rejected and create like a double top and falls like this, the expectation is for the continue. And this also is there's a M formation like 1, like a M shape. So like really and truly, over time, what I'm expecting, if price can break the neckline, this is the neckline of the M. If you can break this neckline, I expect to continue going all the way down to this. So that's a long-term bias. So going, Baba, hi, yeah. I got, yeah, I know. Go and tell mommy about it. Mommy would love to hear. Mommy would love to hear that story. Right. So yeah. Yeah. So if price breaks its neckline, I expect the kind of continue all the way down. So that's my direction, long-term direction bias. My direction bias for this week for GBP is also down. Now, again, what's the note, right? Because that a lot young people just start trade will hear me say the directional bias is down, and them feel like say, yo, it must happen this week, next week. You can't do that. The price may consolidate just for the whole week and no move. It might push up back. It must continue falling into this week. Again, it's timing. You never know the time. You might have a directional bias on where you think price may go, but you never know the time when it's going to go there. And that's important. And it must go there either. It could be a case of reject this here, because this is kind of, matter of fact, this is somewhat of a demand zone. Demand. Yes, it's somewhat of a demand level. And the price range you could reject them and continue pushing back up. Right? But that's why, as the market gives you more information, this is why you have to be adaptable with trading. As the market gives you more information, you consume it and make decisions. Right? You cannot stick to your bias really. So even though my bias is bullish, if the price is showing me other things that it might go up, then I might be buying next week. Right? So this is the weekly. Now I go down on the daily. So again, I always start from the top. Weekly, down to the daily. As you can see, I draw on the level here. I draw on the demand zone here. This is the demand zone. That's kind of how I draw it. From the body of the candle, like this is the base. From the body of the candle, the base to the lowest point at the base. And you see price tap into it and gave me some amount of rejection. It's not major rejection still, but can I give me some amount of rejection? All right. Now, this don't mean as the week open and start sell. Even though my direction bias is sell is a sell, right? Always want to be selling at the best price. Right? And let me say, you want to enter a sell position at the best price. You want to be shorting at the best price. Let me use the term shorting. Because selling and buying out kind of flop. Right? You want to be shorting at the highest price, and you want to be longing at the lowest price. All right. So the right now price is at a low. It is now testing back this low. So this is a low that was great. So this is a low. This is a major low on the weekly, which is right here. Major low on the weekly. It is now testing that low. It's one of two things. It can be rejected. It can reject, then fall, or it can literally. Again, as I keep saying, the market can open and just drop right through, and I get the chance of entering. Market can do whatever it wants to do. It can just break right through and decide to say, yo, yeah, this can happen in one day. It can just drop and go so in one day. And if that happens, it means it wasn't an opportunity for me to be able to trade it. But ideally, what I would want, so if I'm going to go daily, I usually mark on the last day's low, but since the last day low and last week low is the same, I don't mark it on. I'm not sure say it on there properly. Now I go to the 4 hours. I usually use weekly, daily, 4 hour. I go to the 4 hour, and this is what the 4 hour looks like. Now, if you guys saw the roundup, you can see where I actually took a sell of this. I did sell at this one of the trades I won, where I made some gains off it. Now, this is what I'm waiting on. So, a matter of fact, price has already started to. Let me show you the 1 hour. Price has already started to break structure to push back up. All right. So let me show you. I think one of the main things I need to point out is like structure, like market structure is the most important thing. I'm using raw price action right here. I don't use indicators, as you can see. I have no indicators. This is naked chart. This is naked price action. It's just what price is doing. It's one of the past performance of price or past movements of price that I'm using to determine what I'm supposed to be doing. All right. If you look at this now, the market was creating again downtrend. Right now, right so on this 4 hour, 1 hour is a downtrend structure. Market has been a downtrend, as I said, as I've been saying. So the market pushes down, retraces, creates a new lower high, drops again, gives me a new lower low, lower high, lower low, lower high, lower low. It never give me it never gave me a low. Well, it gave me a lower high here, but then when it came back, what did it do? When it came back, it did not give me a new low. That's the first indication that price might be breaking structure. Right? First indication price might be breaking structure. Now you have to wait for the confirmation of the breaker structure. And usually how high that is that, remember the pattern before, the breaker structure means that the price break the pattern. The price was following a specific pattern and it has now broken that pattern, or it's about to break that pattern. So it was giving me lower lows and higher, it was giving me lower lows and lower highs, but then for this specific movement, it gave me a higher low. If you guys remember what the uptrend is a series of higher lows and higher highs. That's what the uptrend is, right? Opposite of what the downtrend is. Now, so when Mr. Price goes up and create this higher low, then I have to pause and see what it does next. Because it will create this, it will create this and still come back and give you a lower high. Man can't do anything on it. So now what you need to look for as a confirmation of breaker structure is if it gives you a higher high. So it took out this high, so it broke this high, gave me a higher high. And it looked like it's about to give me another higher low. No, I wouldn't first of all, I'm not going to be buying because okay, my directional bias is down. Where I want price to go for me is up here. I want price to go up here. This is where I'm looking to sell it from. And that's just because of the 4 hour structure. All right. So price would have taken out this low. So that's the crazy thing about it, right? As I say, how do I explain this now? Because sometimes it's kind of hard to kind of explain what's in my brain in terms of what I understand stuff, right? Similar to what was happening on the 1 hour, price does the same thing on the higher time frames. So again, price is in a downtrend. So the same way you can look at the 1 hour and see the downtrend. So you see what we're seeing here? What we just look at what we just looked at right now, what we just looked at on the I'm go back. Let me highlight it just so you can see. See this entire movement that is highlighted right here? Let me highlight it. I can't find the word to explain what exactly this is in terms of how, and I've said it in the course where price action. All right, how do I say this? Let me think about this. The 1 hour candle for 1 hour candle here is one. It'll be 1 4. So one 4 hour candle is made up of 4 1 hour candles. So the price, I can't remember what the term is. I don't think it's a discrete. It's not. I think it's discrete. Like we kind of right now, kind of define time in discrete terms, right? Where you can actually count it. So you can count the number of 1 hour candles, because in general, time is continuous. Time is never ending. It's continuous, right? You can break it down to the millisecond, microsecond, whatever it is. But in this case, time is being considered as discrete, which means that you can add them up to get into a higher time frame, right? So you can add up these smaller candles, which are 1 hour candles, make up the 4 hour candles. So when I go to the higher time frame, it's the same price structure, and it's the same price movement. So if you look at this downtrend movement, that is what is happening on the 1 hour. When you go to the 4 hour, that's what it looks like. Right? It's not as pronounced as it's not as clear that these are lower lows and higher and lower highs on the 4 hour, because the 4 hour has its own highs and its own lows. Just like how the daily time frame would have its own highs and own lows, are the same way each time frame is made up. And price starts to break structure on the lower time frames first. It's very important to know. Price starts to break structure on lower time frames first. So you realize that the price starts to break structure on the 1 hour. It hasn't broken structure on the 4 hour yet, you know. It actually would require going all the way up here to break structure on the 4 hour. So once this 4 hour structure isn't broken, Once price has not broken this 4 hour structure, then we're still in a downtrend. That's very important to know. Are we in a downtrend on the daily as well? All right, downtrend on the daily. Okay, it's not very. So this will be the daily high. This will be the last daily high. Yeah, true. This is the last daily high. This is also another daily high. All right. So this is what. So again, this makes up. So these 4 hour candles also make up the daily candles. And I said price break structure on the 4 hour candles first. On price break structure on the lower time frame first. If I was to go to 15, so even before price break structure here, even before price break structure here on the 1 hour, I'm probably almost sure if I went on to the lower time frame, 50 minutes, I would see where price break structure on that time frame as well. Let me see. Let me see. I'm not showing as clearly. I'm not showing as clear on this. It kind of is. All right, so this would have been, again, the structure is a little choppy here, but this would have been the high on the 15 minutes. So this 15-minute high would have been, this would have been the 15-minute high. Price already broke through that long time before it broke through the 1 hour high here. So it's kind of, that's kind of how, yeah, so it's almost like a, words at my fingertip, it's like a molecular, I don't know. I don't know what the term is. But I can't remember the term. I'm not even trying to remember it. But essentially what I'm saying is that time here is discrete, and if you add up the different movements and the time and the price movements, you can make up the higher time frames. So price has already broken structure in 1 hour to retreat for the retracement. Again, but I'm saying that if I wanted, I could buy this retracement. But I'm interested in buying retracements, right? The likelihood of price falling is higher than the likelihood of price going up because the market is in a downtrend. So I don't take these unnecessary risks. These are just riskier trades. When I get in the trend, is people can do it, you can do it. I don't do it. And I probably used to do it. All right. So I'm not going to even bother trying to trade this. Right. So what I want price to do now, I want price to come up here, anywhere between here. I'm want to see a similar again. Before price changes direction, it have a break structure. All right. So what happens is that in the counter trend, so let me show you. In the counter trend, let me see if I can probably draw it. See if that would help you see it. Yeah, I'm talking to myself. I guess still talking to myself, but I say again. Let's continue. If let me try to draw it. Either way, I gotta save the video, and if you want, you can come back and see. Let me just draw with this. So the market will go boom. So I call this a counter trend. So a counter trend is also a trend, you know. It's just like it's counter to the main trend. All right, boom, 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 and then make it a longer. It hit my area, right? So it does hit my area, and then now, let me draw it a little bit. I want the data sheet to be a little closer. Let me draw this one a little higher. All right. Oh, sorry. I can extend this. So it hit my area, right? And it goes so boom, and it gave me a low, and then now it goes so all right, boom. This time it gave me. Did it give me a new? It didn't give me a new high. So whereas it's higher high, higher low, higher high, higher low. This time it. So this is what this is what I need to see, right? So it does that now. So this is the last low. So let's mark on this. It's gonna be a last low. Price need to take out this first. So it could have even go higher. It could have even go higher like this. right? You see the moment when it pull back, retrace. You see if it does this and gives me, it breaks this low. So once it breaks this low, what me now wait for now is I'm gonna get my fib again, right? Get my fib again. I'm gonna draw for myself. I'm gonna draw it to this. Yeah. So what me want price to do now, I pull back up into here. And once and to how I've been using it, once price hits this, I'm gonna sell. Once price hit this, I'm gonna sell. I'm gonna sell probably 1 to 3. Then I sell. And that is it. So this would have called I think this guys label them as the breaker structure. We call this BOS, breaker structure. So price that broken this structure and then that give me a lower high. So this is what confirms the breaker structure because it ran to the price could give me a lower low here and still continue up if it wanted and continue to go. But me I wait on this and wait on a signs of reversal and then sell. No. And guys, to be honest, that is all I do. Right? And I still call it a trend following trade because the original main trend on the higher time frame is still down. Right? And that's essentially what I really do. Essentially what I do. Price action. Now again, it's tempting to want to trade this, but we don't want to trade this because the market could do this. I'm using a different color for this. And what could have happened? The market come here and then wake up and it just tank. And do what it want to do. And continue falling. The market really can do whatever it wants to do. It's just you to be able to make sense of what it's doing and capitalize on it. It really could just do this. Come back up, test this. And just continue falling without giving me an opportunity. As a matter of fact, if it does this, I wouldn't need to wait until price goes all the way up here. Because what means that price would have broken the structure that it started to create. So you would have pushed. So that the breaker structure would happen earlier than having to wait all the way up here. If it happened here, same thing. It does that. We'll wait for the retracement back up here. Sorry. I'll delete this. I'll wait on the retracement back up here. And then we continue to sell. So even though ideally, even though my things are alright price, I want price, seeing as how price had reverse, I want not gonna sell until it reaches here. It could just continue falling, retraces back to this, and I continue to sell. Yeah, that's essentially. But it's just about making sense of information as it comes to you. And the price and the market is always giving information. Always giving information. But yeah, so that I think, how long is this stream now? I think probably just going to go through just tell you my biases for all the others. But that's just an insight or a sneak peek into my insight regarding the market. All right. So let me just go to gold. And it's going to tell you my directional biases on all of these. All right. So based on where gold is, I don't think the cycle for gold is completed that it's currently in. All right. And that's a cycle is the market rejected the same again. If you guys see this over and over when it comes to me, 61%, 78. The market rejected this level. I usually say it's like completely once the market has extended back to the negative 27 extension. That hasn't happened yet. But that's not to say that I don't see what's happening here. All right, so the pay attention to what's happening here. The market actually closed above last week's high. It closed above last week's high. So that's a good sign that it may continue pushing up. But then it also ran into some sort of resistance here, which is a previous week's high. This might have been, I don't know which week this is, a previous week's high. So it got some, it has hit some resistance here. But my directional bias for it can still be up. But I guess I'm gonna have to just watch it. All right, so my directional bias that is up. Let me. I'll put in my notes afterwards. Let me go to my next peer. So I already did that. All right. Now, this one now. Yeah, my directional bias of this is going to be down as well. It's going to be bearish as well. For multiple weeks, the price been hit this level. It couldn't break this level. All right. This is the week of from December. Couldn't break this level. It has finally this week actually was taking sales off this as well. Finally broke. I mean, it's still. Wait, this one track. But this is the low. Oh, I think that's. Oh, I think I've just updated it. But this was last. This was the previous week's low. So the week I ended on the, I think 10th. This was a low. So I normally just update it and put it to the previous week. So this is the week. This is last week's low. All right. So the price, and then what do you call it? But like these things are areas of was previous resistance, and it could end up being support. But I can have to just watch it and see what the market is doing. But my directional bias for this is going to be done as well, because I got this bullish. This one bullish. I got this bearish candle here. So market close above, market close below. Actually didn't, you know. So that's what's interesting also. Let me bring it back. I probably should keep this level on there. Let me mark on this separate. Let me mark on this level separate. Because the price did not the price did not break. The price did not break that the price eventually did not break last week's low. It pushed up and ended up closing above it. Hold on, let me make sure I'm dry it properly. Yeah, it closed above it. And that is actually is interesting. So it didn't actually break it. It closed. It still ended up closing back above it. So again, I'm gonna take this off. This is no longer last week's low. This is the new last week. This is last week's low, and this is last week's high. I might just leave this high because it was so significant. So let me not. I don't need to put on the high of last week because it was so close. But my direction of this is still down. Let me see what the daily is showing. All right, so the daily. Yeah, the daily closed below it. So the daily closed below the low. It went back up. This could just be that price can probably end up testing it to fall. But again, it's the same logic. I'm not going to be taking any sales until. Let me see what the forward looks like. All right, same thing here. Look at the daily. So the fib I have here, same thing, the structure. Market in a downtrend. Let me draw this on properly. Again, and that's why it takes so much waiting, right? Because again, it might reach up there in no time, in one day, whatever it is. But if I was supposed to take any more, and then I also would have probably mark on this. So this is a previous low. This is the previous low. This is the actual low that was broken. Or this is the last low that was broken. This is the low that triggered me to sell. So it broke this, retrace, gave me a new low, and then tanked. So sometimes the price will come back and test the low. Worse if it coincides with this area, which is my area of interest. So these are my best prices. Anywhere between these are my best prices. Yeah, so just to watch it. Just to watch it. Let's go to the next one. Use GBP AUD. Yeah, my direction bias of this is. So let me tell you why. So this one now, I put this fib on here because I say, price could retrace because again, my price on a weekly level overall, this might not even be weekly structure. This is probably like monthly structure. It's in an uptrend, as you can see, uptrend. But then in the most recent price action, it's been in a down leg. It's been a retracement leg. Now, will the retracement continue into this week? We'll have to just look at the price action, lower time frames. If it's going to reverse from here, the reversal have to go start on lower time frames. So we're gonna have to watch on the lower time frames. So that that's what the daily is showing. Is the daily showing um any signs of reversal? Not yet. Nothing on the daily showing any sign of reversal. 4 hour. So that's what we have to look for. All right. So there's already consolidation here. No, really not sign of reversal. So it could continue. So my direction bias for this can also be bearish. Think that continue fall. All right. This big massive. So it was consolidating and we had this massive engulfing. So when I say engulfing, I mean that it's so big it covered the body of like multiple candles. Right, so cover the body of this candle, multiple candles they end up covering. So call that engulfing. Because it's a bullish, why I keep saying bull? I'm not saying bullish because it's a bearish candle, called that engulfing bearish candle. Now in terms of on the 1 hour, again, same story. It a consolidate, but then all right, so from here, this is what I mean when I say price, whatever you want. So this would look like a reversal, right? Because went from low to high, gave me a higher low, and then it pushed up and it confirmed a break because it then gave me a higher high. I mean, I'm not interested in buying anyways because my directional bias is down. So yeah, this is a prime example. So as I was saying, the higher level time frame is showing that price is in a downtrend. You see this breaker structure happening on the 1 hour, which is this is the counter trend structure. And it's all right. Price did break this. Price gave me a new low. Push up gave me a new high. Now I look for expect a new low, a higher low to continue going up. What did it do? It pushed, come right back down and take out the last low. Right? And then after that, it went back up and gave me a new high. So the price action here is really, really kind of messy. Now, if I was supposed to do anything, what's the 4 looks like? Yeah, this is mad choppy. And I can't even lie. This price action is really choppy. I don't know if I can even try and trade this. It's mad choppy. What I look for, I would look for is a breakout of this to the downside. If it's a breakout to the upside, I'm not going to. If it's going to break out to the upside, I'm not buying. I would probably wait until it goes. If it break out to the upside, I'm going to just wait until it gets back up to here. And then words when I have these, what I call a confluence. So my 61% level actually coincides with a key level. So these levels, I call them key levels, a weekly high, a daily low, the key levels. So this is added confluence. So once that fib coincides with this weekly level, that to me is what I call confluence. That this level is a good level to sell from, or whatever it is. It's an area to pay attention to, not even to take a specific action, but to pay attention to determine what action you need to take. So I would just wait on. If it breaks to the upside, I wait till it goes up. If it breaks to the downside, then I look for opportunities to sell. So if it breaks to the downside, mean that. So all right, if let's say the price comes back up here and gives me some sort of rejection from this level, then I'm going to be selling all the way down. Once it gives me that, I'm going to be selling. It could be a case where it doesn't even do that. As men say, you have to just ride as I go along. You could have just continue like this. But then what I would at that point then is to still wait again for retracement. My best price is always between 61 and something there. Wait for my best price. All right. And then sell from there. So I wait for my best price again. I have to retrace, give me some kind of rejection. And then I would continue selling. But we just have to pay attention to see what the market will be doing. But I'm looking for sales. Not unless I see a serious like rejection. Breaker. I don't even know. I don't even think. For me, price would have to come probably break. I'm not even sure. Price would have to probably break out of this. Yeah, I'm not even sure what that. That's something I look for now. I not look for now. I have to. I'm not even sure in terms of what I will be looking for to determine to start buying. But you'd have to break some major structure. Yeah, it's been in a down. Like the structure has just been dropping. You're getting, I've really been getting highs on this. To be honest, you have to start creating some major low, lower highs and stuff, right? Yeah. Your JPY also a little similar to gold. Not gold, the GJ. This too, I think, is definitely my direction bias to this is down. I don't see the reasons to start buying for this as well. My direction bias to this is down, probably even down to this level the next week. Daily. These are just markings from the previous week. Let me clean up the weekly first. This is gonna be my analysis, not even. So again, bring this down here. So this is last week's, and then so always mark these on last week's high and last week's low. All right, so because I have to watch these levels or price react to these levels. I'm gonna close this. And yeah, that's what the day looks like. I always like to mark on the last day's low as well. So let me take out these. In fact, last week's low, last week. Yeah, let me take out these. So I don't have to mark on last week's low because last week, the last day is low because of where it is right now. So I would, if I'm going to continue selling this, it's going to require a retracement up to here. So boom, because again, it's still in a downtrend. Downtrend meaning this is a low, high, lower high, lower low, lower high, lower low. Sorry. High, lower high, lower low, lower low, lower high. No me need for sell on the next lower high if it does happen. All right, again, I can do what they want to do. So my fib here, may I wait for price, come back up here, and then this is kind of area of this is a demand zone, supply zone. Sorry, I'd have to do another video on the actual supply zone. It will look like it was a supply zone where you have volumes going in, a base, volumes going out. Supply zone corresponding with 61% fib level, added confluence. Price have to go back up so in this area before me sell again. I'm not going to be looking for buys, even though it already start reverse. So I mean, I say, if the price start the movement are going up, lower time frame would already have to break structure. So the lower time frame broke structure in terms of creating these new lower, higher highs, and also creating higher lows. Take out this, take out this, take out this high, took out this high, took out this low, and it's going up. All right. Same procedure again. To give me some kind of breaker structure show reversal for me to start selling. Silver now, so I think I made money off every single pair X. No, this is a mistrade. I never actually trade this. So in the roundup, you'll see that I recorded a mistrade on this. Never get, I always been attention, or probably was in other setups, so I never bother enter it. I don't know. I just never see it. Silver, didn't actually trade silver either. But this price action is mad choppy. As you can see, price is in a downtrend. It is in a I should rethink that, Probably should rethink what I'm saying. But fundamentally it's in a downtrend. No, we don't trade the weekly trend per se. This is what is important. We don't trade the weekly trend. We just trade whatever phase of that weekly trend. Oh, that's actually very good to summarize it. Never thought about that. We don't trade the weekly trend or the higher trends. What we're trading is a leg in which it's in. So, okay, I'm talking foolishness. It actually is right. It's a leg that we trade the phase that is in. So the market is in a downtrend right here. So we want to look at now is it a case where this, because if you look at this, if you look at what happened last week, this fee was already on there. I think I put the fee on there. If you look at what happened last week, the market goes up, boom, give me a new low, it push up, and it hit, and it pretty much rejected the 61% level. Now, following my principle, the thing is for it to continue going down. The downtrend, it's a sell. I'm looking for sells, right? That must happen though. It can continue going all, even though it does this rejection, it could continue going all the way up to here. Or because it can continue going, it can continue going up, but it's in a downtrend. We check which phase of that trend it is in on the high time frame. It is in a, seems as if it's completed this up leg up, right? Seems as if it's completed this leg up. Now we should determine what to do. So I'm going to go to lower time frame and see what I'm seeing. Right. So you see, even though the market is in, what was my bias on this last week? You know, I might have. So based on what I'm seeing here, right? Which I'm saying that it is important to know like which phase of the thing the market is in. My direction bias for silver last year, I'm sure I've been bullish because of the phase in which the market was in. So on the weekly, this weekly structure, where you're seeing this upper weekly structure, the market kind of is in a downtrend. It's a trend down. Again, this would even be weekly structure. This probably be like monthly structure. Yes, these movements here, these are happening on weekly. These are happening on a monthly. These are monthly movements. These are not weekly movements. So similar to how the daily make up the week, the same way the weeks make up the month. These are like monthly movements. But we're day traders. At least I'm a day trader, and so I focus on like the daily. We call it like daily income stream, or whatever it is. But in order to determine the daily income stream, you have to focus on the weekly and which phase of whatever trend the market is in on the weekly, right? So look at this. It was in an uptrend, as in, most uptrend, I mean that it was in a extension leg, right? It has, however, hit some resistance here, so it couldn't break this level. It still couldn't break this level, so it couldn't break the previous week's low. Previous week's high. And then worse, now that this level corresponds to 61, that's added confidence, and I could potentially be looking for sales on this thing here. Sales, because it look like it's going to start a new phase, which can be a retracement phase in this structure here. That's actually very interesting. Probably should make note of it. I am saying all these things. Let me just put silver. Others are clear cut. Let me just put silver. My direction by silver this week is going to be down. And tell you, when the market start, when the week starts, you know, something can change. You know, your bias can change as you get more information. But it's looking a little bullish based on what I'm seeing there in that structure. I think last week, as I said last week, my bias was up, and it did give a push it upside. But this is looking very, very bullish. Because that one wasn't so straightforward, I have to make notes of it, not notes of it. All right, so go to the low time frame now. So in order for, honestly, as you can see, this is also somewhat of an a reversal pattern where we're slowing down here, but then you have this engulfing candle to the downside. In terms of how I actually drew this initially, because this is why I was bearish last week, because it didn't complete, in my estimation, didn't complete the extension leg. So the idea was to buy from here all the way up to probably here. I didn't miss it though. I didn't miss it, but then I realized that it seems as if the leg has been completed. And it could continue, so that's the next thing too. It could still continue. So I can just watch the structure and act accordingly. So I keep repeating it, as the market gives you more information, you use it and they act accordingly. You kind of have to be reactive in a sense with the markets. Try to predict, people talk about predict market. I don't know about that. Don't try to predict the market. Try to be reactive. But being reactive should be because you're using information the market is giving you in real time. But right now the market isn't in real time close. But when I start giving the information in real time, you'll be able to assimilate information and take action using that information. Right? So it goes a boom, retrace, push, resistance, engulfing. May have to just watch it. All right, let me see what the 4 hour looks like. Maybe it broke structure in the 4 hour. Take out them something. So you probably could call this a low. It didn't even look good. I wouldn't even call this a low. To be honest, I'll wait and see. Because right now, in order for this to break structure, this is the last low we need to break. This low. This is a low you're not gonna break anytime soon. So if I was looking to sell, what I'd want the market to probably do. This is very choppy. It probably can take a lot. I'd have to see some. Tell you what I'd have to see on the. Well, let me check low time frame. Maybe somebody will check. Okay, maybe someone needs to look at it. Because sometimes so that's the thing too. You see, if like you're waiting on the structure break on like the higher time frame, like even the 4 hour, it takes a lot longer to break. And so it takes longer to break, you might already miss the move because if you focus on this higher time frame. So the 1 hour might be a better indication to look at for the breaker structure. So this would be a low. So this low is taken out. Again, that's the only way you can actually have a reversal like that. So this low is taken out. So from all the way up here, all right, it look kind of choppy, but if you look, you will see it. In fact, I wouldn't even call this, I could call this a high. So it took out this low, it pushed back up, give me a new high, and it tanked again. Now, and then it gave me another lower high. I gave it like to you. These things are choppy that I'm not sure. This thing is very choppy that I'm not even sure what. To make of it. It's very choppy. Very, very choppy. I might leave it alone, you know. So usually let me just take out this, because I might end up leaving it alone. Similar to how I had the thing before, beside this, I'm not really sure. But the buyers, and it's okay not to know. You don't need to know everything. It's okay not to know. So I put in that right there because I'm not too sure. Based on me and sit down and say, you know what, let me put back there. Let me put the bullish. What I should say is that I don't see a setup yet to actually take those buys, to take those sales. So then wait until the week starts and I'll see what information the market can give me. Yeah, because it could be a case where I'm gonna have to wait until it kind of comes back up here. But then that might be safe. Again, this corresponds with some previous structure over here, previous high that it broke. Market corresponding with the 61. 61 also corresponds with previous week's high. So it corresponds without key level. So I might want to see price push up here and show me some signs of rejection before I start to sell. I could come to this a low that was taken out because the market push up, came back down, push up again, then tank. This is structure we're seeing on the 1 hour. That was taken out. This look a weak low. Yeah, so let me see what the market does. Because it could very well possibly, based on how they set up, let me just look at the other side of it. Hasn't broken structure yet. So hasn't broken structure yet to a reversal. Yeah, so it could still continue going up because it hasn't broken. This really actually could still continue going up. It has not broken any structure. Let me go back to I might have revised my bias for this thing, you know. I might have to revise my bias. Let me tell you why now. Even though yeah. So the market give them conflicting information, but I think a lot of this sign is pointing to the market continue to go up. Even though I say we couldn't break this level, it still closed This is a pin. This is I don't know what you call it. This is a pin bar. So the market, even though it didn't close above it, it printed a higher low than last week, right? I think I can change my directional bias on this back to bullish. I think I might do that. I think I might do that. And watch the market. Let me check out this because when I draw these lines and then kind of cloud your bias, it could continue going up. Let me check out this too. Check out them figure for this. Yeah, you see, them something there. There's a lot of, well, I don't know if you call it liquidity. Maybe, but they could possibly continue going all the way back up. You see it kind of bottomed out here, where it round up. Could have some more volume going up here. It's clear the buyers are still in control because it pushed down and was rejected. And then this is also kind of indecision candle, you know. Indecision meaning that because the wick at the top is so high and the wick down here is so long, it could be a decision candle. I can go back to doing this. Let's see what silver do. Not like silver. I really never really trade silver, to be honest. But that's other because I need it. I think I need some more instruments to kind of focus on. But that was the last one. So that was the last one. This has been 51 minutes. I don't remember. Did I remember all this stuff? Let me see. GJ, already have GJ, UJ, bullish, GA is also bullish, right? GA was bullish. Yeah, my direction bias on this is bullish. So I still bullish on all these. There's one I'm missing. Gold. What's gold again? Gold. You got your gold? It's crazy. You not got your favorite pair? I feel like I didn't go through it. I did not. Yeah, my direction bias of gold is still up. I think I did go through gold. That's the first one. My direction bias of gold is still bullish. Am I reliving this thing right? Nonsense. These are bearish. Sorry. Bearish. Bearish. Gold. Bullish. Which actually makes sense from you know, not living something, bro. This is also bearish. Not living something, bro. Yeah. It's bearish. Bearish are down. This is also bearish. Bearish, 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 bullish. And they kind of also kind of make sense kind of fundamentally. GJ and UJ, those pairs are, yeah, the yen is a safe haven. Gold is like a risky pair. Usually when the market, when risk is on, mean that people risk on, risk off. People become more risk averse and they want to take more risk. They put more money in gold and the money kind of come out of these other pairs like UJ. Money comes out of the yen. So the UJ, well, I'm talking foolishness. If UJ, okay, never mind that. Never mind that. Because if UJ is bearish, it means that one, the US dollar, I guess it kind of corresponds that way. If the, it's not making sense what I'm saying. Scrap that, forget that. I don't like to explain things I can't explain properly. So I'm not even try to think in those dimensions because I don't really think in those dimensions of risk on and risk off. Anyways, I really don't. I mean, I really think in those dimensions. What I probably need to do, let me check to see if any if we have any news coming out this week. I feel like when it come out last week, there was big news last week. Last week we had PPI, we had CPI for the pound, and we had the US CPI. So US CPI came out, which is pretty much it's a measure of inflation. Inflation affects because inflation has a lot to do with currency pricing and valuation because it determines it forces the hand or it can force the hand of like central banks and in this case the Federal Reserve, right? And price movements in the what we call policy rate. So the policy rate is like it's the cost of money within the US currency. How much it costs to get a loan and them something there. So it impacts the supply of money and demand for money, that interest rate in the market in America. And so it impacts currency prices. When this news came out, um, so I think it was let me check what it says. Because core CPI month over month, it says a change in actual greater than forecast is good for the currency. But in this case, the actual was less than forecast. So it quote unquote end up being it could end up being bad for the US dollar. So the US devalued, which is weird. The US end up devaluing because what means that if inflation becomes low and lower, what is gonna happen is that the feds have already started to cut rates. Right? They've cut rates. So rates are not going to be going any higher. So let me tell you what I mean. So every country in the world, I think, holds again. We want to keep it as simple as possible because we don't know the details. But when you hold your dollars in US, if you hold the money if you hold the currency in US dollars, what you earn on that US dollars, the interest rate, the policy rate is indicative of what you earn on that US dollar, right? So when interest rate goes up, when inflation goes up, the feds are more likely to raise rates. So you will earn more on the US dollar if you keep your money in US. So there's a demand for the US currency. So people never start sell whatever other currency for buy the US because they can get a higher yield on the US currency, right? Now, when it goes down, or if the now increase rate opposite happens, the US dollar now looks less favorable. And it actually shows in the movements in the currency this week. So let me tell you. So when the US dollar is devaluing, gold is going up. How people start to do is that the US dollar now worth less. It's almost like again, gold is a store of value. If the US dollar similar to what we do in Jamaica, right? Them say put their money in a US dollar because it holds value against Jamaican dollar. Because Jamaican dollar devalue. Similar to this. When you're in the US now and you have US dollars and it a devalue because the feds are raising rates, they tend to want to put it in like these assets where we hold a value like gold. So gold demand that goes up and US currency goes down, faster to fall. It also can be shown in the yen, right? So the yen, this is the price of the US dollar in terms of yen. You realize now that what's really happening here is not that with the pullback happened this week, the price fell this week, this massive fall off this week is not necessarily the yen was strengthening, or maybe the US dollar, based on the inflation news, the US dollar was devaluing. And so it now takes less yen to buy a US dollar. So that's two ways to look at it. So this movement in the yen can be that if the US are strengthened, then it takes more yen, and so this chart goes up. If the US is weakening, then it goes down. So the opposite. So for the yen side now, if the yen is strengthening, then this goes down. Okay, now it takes less yen. If the yen is weakening, then this will go up. So the two sides again is a currency pair, right? And it's an equation. It's literally an equation. It's like one above the other in a sense, based on what the price is. And of course, the opposite happens if one increases, then the other one. Yeah, so essentially that's what's happening here. And the same thing for the euro. Well, I guess it would be the same for the euro. It might be indicative that it could be possible that the yen was also weakening. Was there yen news? Check if there was yen news. If there was yen news this week. And the yen pairs were falling off. It could be yen news where the yen is actually strengthening. And so those currency pairs are falling off. Oh yeah, there was yen news. There was yen news on Monday. No, I said the yen is a safe haven. This was Monday at 6:36. When did I take those trades? Let's check the time, just for purposes. This period of start drop sometime in the week. I don't know which day it was. Let me check when I took those trades on the yen. And the fundamentals move the market there. Those news items are out the market. I got a big trade on the yen. Is this? Monday was when? Monday was the Tuesday evening. Well, not Tuesday evening, Tuesday. Tuesday, I think I did it like Tuesday night. What does the time say? 14. No, that's showing me. But yeah, essentially, I entered the trade after the news came out. Essentially, yeah, man. So it was actually so the news came out. Yeah, man. So the news came out Monday evening, right? I entered the trade. I would have entered the trade on Tuesday. It might have been after 12 then. My time, I can't read the time properly for them. Something. It is saying Tuesday morning. If this is 2:46 in the morning, then it means that this is Tuesday morning. I came into the trade Tuesday morning, which means I probably entered around, yeah, 7 o'clock. Energy time, it now makes sense. This must have been the other day. So, but it looked like I exited on Wednesday. Exited on Wednesday, entered Tuesday. So yeah, it was after the news. The market reacted to the news. This might have been a lagging response. But yeah. Well, guys, that is it. Let me stop sharing. Um, yeah, did an hour. Nobody joined, but at least information is recorded, and I can save it in the demo to what do you call it? Demo to profit. Demo to discipline. Demo to discipline. Demo to discipline. I'm tired. Sorry. Demo to discipline series. So we're in stream. So until next week. I might do this every week in terms of the breakout, the weekly outlook. Let's see how the week. All right. Nothing I needed to even be right or whatever. But I guess they make note and so that the next week I'll look at how they actually played out. So I'm bearish on yen, silver not so sure. Bearish on UJ. Oh yeah, EJ. I'm missing EJ. It's also bearish on EJ. EJ also bearish. Pretty much bearish on all the yen pairs. Oh yeah, for those who don't know, the yen pair, these are cross pairs. The EJ and just education purposes and GJ isn't a real currency pair. It's a cross between two other pairs. Let me show you what I mean. UJ is USD JPY divided by JPY. It is a cross pair between and there's so this is a cross pair between this and another major pair and GBP USD. All right, there's a cross between those two pairs. Now, if you guys remember fractions, when you multiply these two fractions, what I'm gonna do is you strike out so USD that gets striked out, so you strike out the USD, so you end up with 1 over yen, multiply by 1 over, so you end up with 1 over yen, multiply by, let's write it out, so you end up with 1 over JPY. Let me do it the other way so it looks a little easier. GBP USD, the major currency pair, if you multiply that by, and it's kind of written like this, so GBP divided by yen, right? For sake of the explanation. And then you have USD J divided by JPY. Now if you guys know fractions, numerator So this numerator, which is yen, strikes out this denominator here. All right, so you end up with GBP times 1 over JPY, and that equal to GBP divided by JPY. So what that means is that you see when UJ drop, when the UJ drop like rapid, which will be the when GJ, which is again the same fraction, right? When this a decrease, the overall value of this is also decreasing because it is a cross pair. Same happens for this. If GBP is falling, it also can impact it. So if this is falling more relative to UJ, it will also cause it to fall. Either side is moving, um, can move the pair. So sometimes a little risky when I trade both of them because really and truly. Or what happens that if I'm in, all right, it's like my biases or both of them are the same now. I'm okay with that. If the biases are different, then kind of raise them antenna because they're correlated. So if they're correlated, we cannot trade two different directions but the two of them. Is either make a trade one or I'm not trade none of the two of them. You see me? So that's a little thing that you probably want to know, but yeah, very cool. And I got to do the same thing for GJ. So GJ would be a crossover between the Euro USD, which is another major pair, and the same USD JPY, same thing. All right, cross pair. So it's not a major pair. And the same thing can be done for GA. GA is also a cross pair. Anybody can guess how you get that GJ? Guess. All right, I'm gonna say the GBP, USD, and AUD, USD. These are also two major pairs. Again, so this one's a little funny how this is on record, is it, man? I think there's some flipping with it though, because the price based on the value of the currency. What I mean is that they do some flipping for this one though. So GBP USD, and what they do, they multiply it by the inverse of USD AUD. To inverse. Matter of fact, if you take the two currency pair them right now, I know the matter of fact, okay, I'll look at time. Let me just do it. I'll look at time, right? I'll look at that. Let me show you the USDJ. Let me show the USD. GBP USD. This is the price. The price is currently 121. Let's use the 121,611. So 121,611. Okay, you don't need to know this. This is just a cool little, just a little fun. It's mathematical fun. All right. And AUD. Wait, we can't. Oh, sorry. And AUD USD is this price, and it is 0.61869. $0.61869. If you're supposed to multiply these, it actually, I don't even know what period I should give you. This wouldn't even give you, it wouldn't even give you a pair, right? It wouldn't give you a pair, a currency pair, to be honest. So I multiply these and see what I get. It wouldn't give you a currency pair. It would just, to be honest, I don't even know what it would be. But 1.21, 611 multiplied by 0.61869. 69 equal to this. But this is not the price of, this is not where GA is right now. It's not GA value. So this was given the value for GA, but it's not GA value. But what I saw what they do is actually the inverse. So what will end up being is this multiplied by 1 divided by this. So I'm going to record this part first. 1 divided by this. This was going to be GA price. So let's check it. So I'm going to record this part first. I was going to copy this in the calculator. Can't I should. Got input 1 divided by I mean, it might not be. Hold on. Let me see. I might come back to it. So equal to this. All right. I've got my flop myself. Because these. All right. All right. So now we're going to multiply this by this. $196. Is that where G is? What do you guys see? This is the GA closing price. So that 1.96333. What do we get on the calculator? 1.965 something. So that's how them get it. 1.96. That's how them kind of derive it. I say it might be off because this can go all the way back. And also what you're probably seeing here is you have a ask and a bid price. So that would be the actual fair value, or I guess the actual, yeah. But essentially we can get it. Alright. So it's a cool little fun math. That's not even needed to trade, but well, it kind of does. As I said to you, if these things, they might have correlation or negative correlation. You don't want to be trading pairs that have those kind of negative correlations or positive correlation. Or even if they do, you're aware of them, so you're not doing foolishness. Right? Because again, I said, if UJ is in a downtrend or UJ doing massive volumes to down, you don't want to be caught buying GJ. Chances are will stop you because you don't want to be caught going opposite direction. Chances are it's gonna work then. So depending on how strong or depending on how weak GBP the pound is. Yeah. Well, yeah, that's it, guys. It's a long video. I don't know if anybody can even watch this, but it's also for my benefit, if I'm being honest. It's also for selfish reasons. I can go back and look at the video and see what my thinking was, my thought process was. So it also acts as a journal for me, even though it's providing useful information for persons who want to learn. But until next time, guys, let's check Fibonacci out.